can see this. So if you can see this, if you are watching this, what I'm going to go through today is a quick information blurb about what is the best investment for me. Now, why do I want to share this with you? Well, over the last, even especially the last couple of weeks, I've often had either clients or people who I haven't really got to know very well ask that question for themselves. You know, hey, Duncan, I've come across a couple of different deals. Which ones are going to work for me? And the focus isn't so much what is the best investment. It really all comes down to what is the right investment. Because at every stage in your life, we're going to have a different set of requirements to think about. You're going to have different variables. There are going to be different considerations. So I'm going to share with you right now what some of those considerations are when you're looking at the different types of investments you want to get into. Okay. Now, what gives me the right to have a bit of a chat to you about this topic? Well, look, I've been investing for about 20 years and I have been working very diligently as an investment coach and consultant for over 10 years now. And I've personally been able to, clear all the debt off my home, be mortgage free, be debt free, have absolutely no personal debt, be able to build an investment portfolio simply that gives myself and my family the ability to have a few cool choices, the ability to be able to do what's most important for us. And over that time, having spoken to thousands of people around the world, I've got a pretty good idea about what works and what doesn't work. And some of that information I'll actually be sharing in just under 2 weeks now at our next live masterclass. So there'll be a registration link at the bottom. So feel free to make sure you write that down and go to that site and get hold of that information. So having spoken to so many people, having been able to have the privilege of sharing this information with those around me and then empowering others, this is the kind of stuff that I want to bring to you right now. And when you start analyzing the different types of investments that work for you, understand that I have been asked this question over and over and over again for many years. I've been interviewed on radio. I've been asked to write in various magazines. I've been featured in articles. In fact, just last year, I released my first book, which became a multiple #1 bestseller. And again, it's something that breaks down, regardless of the types of investments you want to use, whether it be shares, property, or business, it breaks down how you can actually use all those different investment strategies for a reason. And that reason is to be happy. That reason is to have that financial choice, that financial freedom. Okay. And so this is what I'm going to share with you right now. So again, if you're listening to this live or if you're on to the recordings, make sure or feel free to ask any questions that you might have as we go. But understand that the considerations you need to make when you look at what are the right types of investments for you are here are the 3 things: results, type, and variable. Okay, so it often seems like there's so many moving parts when you're trying to understand and articulate. Okay, again, listen, I'm not saying what is the best investment. I'm saying what is the right investment. I was chatting with a friend of mine just yesterday afternoon, and she was talking to me about, I've got this money. I've got some profit from the sale of a property in Sydney. Do I buy a rural retreat that I'm really quite passionate about putting together? Do I buy an apartment in Brisbane? Do I look at investing in a set of backpacking hostels in Darwin? Do I put some money into a small development? Do I put some money into a loan structure or the stock market? So there's so many different opportunities that are out there, and that is the specific investment asset itself. So the first thing you want to understand is the result. What is the result that you're after? Okay, and it really breaks down into 2 simple requirements. Do you want growth or do you want cash flow? Do you want to build equity or do you want to build an income stream? Okay, they're the two main requirements. That's primarily what we get into any kind of investment or business at all. Okay, if you're investing in shares, you want the share price to go up, or you want to secure some dividends. If you're investing in real estate, you want the property price to go up, or you want to get a rental return from it. If you're investing in business, you want the business to grow in value, or you want to generate an income stream. It's always the same. So the first thing you actually have to understand is what is the result that you're after. Okay, get very clear on the result. Else it just becomes, you start looking into investments, and I've seen people get caught up in analyzing a deal. It's a cracker of a deal, but it doesn't actually help them get them to where they want to go. It might be an absolute brilliant add value equity producing deal, but what they really need and what they were really looking forward at the start was cash flow. So you really have to understand which one do you have? Do you want both? How you actually get to that, okay? The second thing you start thinking about is once you understand the types of result that you want to get, you then need to understand what types of investment classes are out there. Do I want shares? Do I want property? If I'm property, am I buying residential? Am I building? Am I doing commercial? If it's stock market, am I doing live trades? Am I doing options? Am I doing Forex? If it's business, am I buying and selling a business? Am I building it? Am I owning it? Am I managing it? So the type of investments you get into are so absolutely critical, okay? And you need to link them back to the result that you want. You need to link them back to the result that you want. The third and final thing that you want to look through, and I'll give you some examples in a minute, are what I call variables. And in the variables, these are all the different combinations that you can apply that when you acquire or when you want to take on the second point, so the type of asset, to get you the first point, the result that you want, okay? What are the variables? What are all the variables you have to think of? And I'm just going to give you an example on some of them right now. Some of those variables might be ownership structures, okay? So over on the left-hand side of your screen, when you look at it, you'll see companies, trusts. Okay, that could be an ownership structure. You could buy something in your own name. You could do something joint. All of these have a flow and effect, okay, down to the bottom of how you're going to fund it. So how you're going to fund it depends on how much cash, how much equity you have available, and if you're going to leverage. So if you're going to borrow funds, how much are you going to borrow? How much can you borrow? Right? Now, the assessment that lenders will make and the amount of equity that you need to put in depends back on the type of ownership structure. If you're buying something, for example, within just your company, that has a different set of borrowing and credit requirements than if you're borrowing in a trust with a company as trustee. That has a different set of requirements if you are using a self-managed super fund as a structure. That has a different set of requirements if you're borrowing as an individual or in business as a sole trader, which has a different set of requirement if you're doing something joint with someone else. So depending on how your ownership is, impacts directly on the type of funding level you can have. Then the other consideration you want to start looking at, well, how do you maximize your profit? And you obviously maximize your profit by understanding how can you minimize the tax. Now, tax avoidance, that's a dodgy thing, and I'd certainly don't endorse that. But tax minimization is 100% legal, okay? And there are so many different ways you can get around that, and you can optimize the profits that you have. So you need to then start planning with the end in mind. If you're going to acquire something for a capital gain, what kind of a structure it's going to be. Once you sell it, who's going to own the profits of the capital gain? You can't really distribute capital gain as much as you can income. If you're doing something in a company, for example, in Australia, there is no, you can't benefit from the 50% capital gain discount if you own it in a company, but you can if you own it in your own name or if you own it in a trust. If it's income, what kind of income? Is this ongoing? Is this residual? When is that payout going to be? Is it going to be to yourself? Is it going to be to partner? Is it going to be distributed through a trust? So again, by understanding the results that you get and then linking it back to the opportunities or the types of investments that are available, then understand all the variables, because again, if you look at the picture on your screen right now, the variables exist. And then if you change just one, it has a flow and impact to all the others. You change a different one, it has a flow and impact to all others. And you need to understand what all those flow on impacts are. You need to understand how to optimize your results. Now, again, a lot of this information comes out, and I'm sharing this with you in a week and a bit at the online masterclass. So again, you can register and get more information about that. But in the meantime, please take away from today that as you build your investments, you need to understand not what is the best investment for you, what is the right investment for you. And when you analyze that, you need to understand those three different considerations. Firstly, you need to understand what's the result that you want. Okay, you're after growth, you're after cash flow, you're after a combination of both. Then you need to understand the second one, what types of assets are out there that will match the requirement that you have in point one. Third, be aware of all the variables. And a failure to understand any of those 3 points can end up in a little bit of a financial disaster, can end up with wasted time, wasted money. Now, we can always get back money, but you can never, ever get back time. Please take those points. I hope that's been helpful. If you want to learn some more, jump on duncanbuchanan.com or indeed register for the masterclass that's coming up in a week and a half. I hope that's been helpful. I know it's been short and sweet, and I look forward to catching up with all of you guys again at another time. Take it easy.